Hello and welcome to Uselink and Capital Cosm. Nothing in this video is financial advice. Neither Uselink nor I are financial advisors. And today we have a special collaborative session. We're going to
Yeah,
look at the uranium sector and we're going to chart out a bunch. We're going to look at this at many different angles, guys. So first off, Uselink, take it away.
yeah, sure. Yeah, well, I mean, uranium is looking very interesting after many months of consolidation, pullbacks, whatever you want to call it. I know many people are getting tired, so that's usually when we're at the bottom, right? But yeah, let's just dive straight into it. We're gonna look into some ETFs here to begin with. Let me know if you can see my screen.
Yep.
Awesome, awesome, awesome. Let's just quickly go there. Just gonna remove this as it is. I think I need to do 1 second here. Get a reload. Yeah, very good. Okay. I have before this, I tried to clean up as much as possible just to remove all of the shorter time frames, trend lines and so on, to just to keep it more smooth, I guess. Yeah, but basically, if we zoom out here, let's go to the weekly. We use the weekly time frame for this presentation. It gives more clearness and removes a lot of noise. Again, uranium, as you know, and as I have been telling for a long period of time, is one of my favorite sectors, and I think that will be one to where you can really boost your income or your wealth, let's say, for this decade. URA is a 70% pure play, I think, 70% uranium
Yeah,
miners,
70%.
and then it's mixed in a lot of other stuff. I can't remember exactly, some hydrogen and solar, I think. So
Yeah, stuff that has nothing to do with uranium, essentially.
yeah, exactly. I don't know why it's in there, but it is what it is. Um, but yeah, basically, ever since we bottomed out in March 2020, where basically the commodity bull cycle began, we have it right here. We had the big run up here, and now ever since for like the last 18 months, we've been in a long-term flag pennant, whatever you want to call it. And for URA at least, we have broken out and did a deeper pullback. Again, I think it's due to the fact that we are only 70%. So you have some other areas that does different things compared to uranium. So that's why we get this bit of a skewed breakout. But as you can see here, we are trying to get things going. And for URA at least, my big level is the 24 coming across here all the way. You can see the wicks and the interactions here. Also looking back, you have these bad boys over there. So the 24 for me is the big goal level. Again, we have broken out, so it's all bullish now. I still, again, as always, as I like to talk about, we need to take out the previous breakout high level to confirm it, which is 23.3-ish, give or take. And we're still not there, but we should get there if everything goes the way I think it will. So URA looking mighty fine again. We had uh, some very red days in the early of the week, but today we are up like 2%. So closing in the upper 50% of the candle, which was very nice. I was a bit worried on Wednesday when looking at the candle, but we have actually made a quite nice candle here today.
Yeah. Got a nice looking hammer candlestick. Do you want to look at the daily and see how we closed out today?
Yeah, sure. I think we still have. Oh, we are closed. Okay, fair enough. Fair
Yep.
enough.
Look at that
Uh,
bullish engulfing at the end.
this is a nice one. Also, the volume, 1.5, 2x of the average. That's very good. And also remember today, the SPX, and Nasdaq, and so on. I think they were flat, but they opened 1% down and they ended up flat. So having this big of an outperformance in a day where the market didn't really do anything, that must mean something.
Yep.
So that's very nice. And yeah, so a nice daily candle for the URA. Um, so so yeah, and I can also see on Twitter that many of the bigger accounts are starting to write about uh, that you should be looking at uranium because it looks very fine. So that's
Oh yeah,
also
like
something.
Tuppy.
Yeah, like Toppy and
Yeah.
what's his name? Edward Govsky, I think. He's a big EV Elliott Wave account as well.
Mhm.
So that's also worth of a note. Again, let's just quickly go to the URNM. Again, we don't have that much data because it only goes back like 3-4 years. But still, this is the 100% pure play uranium ETF, which is the one you should buy in my view if that's what you want to go into. Let me just remove the smaller stuff here.
Yeah, and the reason why URA just has more volume or more liquidity, just because, or actually, the reason why URA is preferred by institutional investors is because it has more liquidity.
Yeah,
Has
exactly.
nothing to do with like anything else.
Yes, exactly. And also the URA is has a longer history data and so on, so they have more data to look at. So that's also one thing.
Yeah.
But again, similar to the URA, nice weekly hammer candle pattern. I had this smaller, you can see it here, green support zone, which I would prefer that we stayed above for this week. And on Wednesday, we were below when I did my the uranium recap that I did on my channel. So to see this retrace today, perfect. I'm very glad to see that from a guy who loves uranium. And yeah, again, you can see it here. We have, where is it? It's right here. We have almost taken out again this breakout high here. You have a high there. So we're trying to make a higher high and breaking out of the overall consolidation. So hopefully next week, in 2 weeks, I don't know, we can have this final breakout.
Fingers crossed.
Fingers crossed, yeah. But it's a big trend line, this one here. So it will take some it will take some effort to get through as usual. So, but it looks fine. It really does. It really does. But as you can see, URA, URNM, they look quite similar. So I guess there's nothing more to add. What do you have? Anything to say?
What about URNJ? Do you want to look at URNJ?
Yeah, sure.
So that is completely uranium miners, whereas URNM has a little bit of Sprott physical uranium sprinkled in.
Yeah, true. I think maybe we should go to the daily because we only have like not even a year, like 8 months or so, 6 months or so. But again, what I could be able to find what I'm looking at is that we did break out here at the start of August, came in to the red resistance there, retraced all the way back to the standard retest that you normally see of this bad boy coming down here, and now we have a big bounce at that retest. So from a technical point of view, pure standard textbook breakout retest, hopefully resumption, and we need to clear this breakout high here at around 18. So
nice.
So when we do, if we do, that's when we see higher prices, in my view.
What about you want to look at URNJ versus URNM?
Yeah, sure, we can do that. I haven't
see some of the more speculative.
I haven't charted that before actually, but it's more of a risk on, risk off, I guess, speculative bet. So
yeah, because in these uranium bull markets, we want URNJ to outperform URNM.
Yeah, exactly. So yeah, we're bouncing off this lower golden trend line right there in this vicinity right here. So so that's also today we are. It's a weird candle, but still, it's if only we had more data, I guess, then we could see that this would have been one big long stage 4 decline into a stage 1 basing, and then hopefully a stage 2 incline here at some point in time. But we don't have that, so.
Yep. And I see you've also got URA versus SPY. You alluded to some outperformance there. Do you want to look at that? Oh, there it is.
Yeah, there it is.
Yeah.
This is actually, I think people are bored with uranium, but from the March 2020 lows, let's just see how much URA actually has outperformed the SPX. I don't think people give it enough credit. That's 75%. It actually outperformed, even though it hasn't done anything for 2 years. So the initial move up in URA was quite big. I think it went from like 7 to 30 or something, so like 4x. That's a big move.
And that's probably an even bigger move when you look at URNM.
Yeah, I would imagine so. Yeah, true. And also, when you do a 4x move for over 18 months, you need a long pause or a long rest before you go possibly higher. So, and that's what we have seen for the past 12, 18 months. I think that's just the big pause before the next leg 3 up. So yeah, again, getting back into the technicals, we have these two, this pennant here, and then we have this one is a cloned one, as you can see from there to here, and yeah, we're back into the main squeeze, which I have called it, which is very good, meaning that we are back into the bullish setup where URA will probably start to outperform the SPX when and if we can get the final notch here to the upside. Again, this is a very big resistance line. It takes time. It might fake you out and so on, but still, when it happens, if it happens, then yeah, URA is preferred over the SP 500. And also institutions look at this as well, not just us, you and me, the little guys. They look at these ratios to see where to put money for some period of time. It could be half a year, whatever. But that is what they look at. So
Yeah, because it's all about making a choice between one thing or the other. So you've
yeah,
got to see
exactly.
how that one thing compares to the other.
Yeah, exactly. So they have X amount of money that they need to allocate to something, and they look at all different ratios between tech and energy, go whatever you name it, and then they'll find, okay, these two are the best ones, and then they'll deploy. So
Nice.
yeah.
Okay. So do you any other charts you want to look at before we segue into some of the stuff I have?
I mean, we have different ratio here. This is actually the URA divided by the commodities. Yeah, the CRB. And again, I have this red zone here, which in my view, when we get above that, if we get above that, then that's also an extra tick you can put in the checkbook to say, now we even have URA, hopefully also outperforming overall commodities. Again, you can find more of these, and the more ratio that uranium will outperform, the better, because that means that, yeah, as we talked about before, the big ones will look at this and also allocate their money. So, and I'm a big bull for overall commodities for this decade. So having uranium outperforming those, I'll take that any day of the week as well. So,
Yep.
And
looking good, Casper.
Yeah, a final one here. Actually, it's not uranium specific, but it's the energy XLE divided by the SPX, the SP 500. Coming off, this was a big blow off to the downside where SPX heavily outperformed the XLE. But this was a inverted head and shoulders. You have the neckline, and then what it has formed ever since is this upsloping golden trend line, as I call it.
Looks like a fairly reliable support line too.
Yeah, it really does.
Tested it 4 times.
Yeah, and also the one thing to look for in my view is this bull flag here, flagging perfectly into that one and bouncing. That's technically what you want to look for. So it's beautiful. Again, NEGs will outperform the SPX. So, and again, uranium is energy, so that's what we want to see.
Well, how does this look when you zoom all the way out? Yeah.
Yeah, I think you have it like this. This is on log scale, by the way. So I chart on log scale. So, but you can clearly see that
like a 3.5x.
Yeah, exactly.
Or 4x.
Yeah. So so you can clearly see from the highs of 2008 that the SPX has clearly beaten the energies for like 10 years or so. But that's coming around now. The pendulum is swinging to the other way back again in favor of energy. So
yeah, and there was a time when energy made up, I think it was 20% of the S&P.
Oh, really?
Okay. Now it's like 5%.
Yeah.
So it kind of corroborates what you're seeing there in your chart.
Yeah, 20%. That's a lot. If we can get back to those percentages, that's a hell of a move. So
yeah, and I mean the majority of the S&P now is just Microsoft or whatever like other blue chip is in there. It's only like a handful of companies.
Okay.
Make it up.
Yeah.
Great. So yeah, let's go ahead and pivot over to we actually created our own index.
Yeah, I did as well. You did it a bit better than me, but yeah, we did.
Yep. So this is something cool, and the reason why we did it was because Casper, do you want to enable screen sharing?
Yeah, I just stop share right there. You should be able to do what you have to do.
Awesome. So, so on the very top half of this chart, we've got URA. And the problem with URA is it only goes back to 2011, right? So the last great uranium bull market topped out in 2008. Or was it 2007? One of those, around that time. So we're missing a significant chunk of the last bull market. So one of the things that we decided to do to control for that is create our own index. Now we had to restrict it to companies that had history stretching back 15 plus years. So you've got your UUU, you've got your Paladins, you've got your Deep Yellows, your Bannermans, etc. And this is what you get at the very bottom of bottom half of this screen is that hodgepodge of uranium companies. And the reason why I'm charting them neck and neck is just to kind of illustrate that this index, which consists of these 10 companies, is a fairly reliable representation of URA. Now we can actually go further back with this index. I'll show you in a bit. But if you look at URA, if you retrace back to the old highs of URA, you're looking at about a 6x from here. Now, if you do the same with this index, you're looking at about a 4.5x. So this index actually a little bit underreports URA. So you can kind of look at this as a conservative estimate. And the reason, one of the things that I kind of included in this index as on top of the companies is to square root them. And the reason why I square rooted them is because with companies like UUU or Paladin, there was massive share dilution from 2008 to today. So to kind of control for that, extreme inequality between today's price and 20 years ago, I applied a square root function to those companies, and this is essentially what you get. It kind of controls for that, and it seems like it's a fairly adequate control. It seems like it's pretty much capturing the same action you saw in URA. Now, if you zoom out a bit, so I'm going to pick a different ticker. I'm going to say, let's just look at the M2 money supply. And I'll tell you why this is important in a bit. So this is the M2 money supply at the top. Now, this is the index here at the bottom. So the index is currently at an index of 1.97. Now we actually have data that stretches all the way back to 2007. This is the last peak of uranium. Now, if you retrace that to that peak, you're looking at a 7x from this basket of uranium companies. And again, we're doing our best to control for the share dilution. But one thing to also keep in mind is you can tell we had a lot less money circulating in the monetary in the system in 2007 versus today, right? So if I look at a comparison between the two, and we've tripled our money supply, right? So even if we go back and revisit the old highs that we did in 2007 with our uranium basket, when you actually control for the money supply, you would have to 3x whatever that number is. So 7x could potentially be a 20x. As wild as it sounds from here. Let me know if I'm going off the rails, Casper.
No, I mean, I'm just thinking here, are you able to take that index divided by the M2 money supply? Can you do that?
Yeah, I could.
You need to.
It would just be, I'd have to multiply it by like some insane number because the denominator is so big, right?
Okay, but maybe we will post a chart within a day or two about this, because then you can see the real magnitude of that
and the reason
situation.
And the reason why I just posted this is just because some of the numbers that I was seeing when I was dividing by M2 was just like a 20x from today. It's kind of embarrassing to post, but I mean that's what the math is saying. And then when you look at here, this is a list of all of the largest uranium companies by market cap. In total, you've got a total market cap of about $45 billion at present day. Now we had at the very peak of the last cycle, we had a peak of about was like 150 billion.
Give or take. Give or take.
So a 3x just based off of this metric here. but then that's not controlling for the money supply either. The money supply is triple. So we have a 3x from here to revisit those highs, and another 3x control for the money supply. That's just, I mean, that's a 9x. I mean, you're looking at just something. So if I had to bet $1, well, I bet more than $1 on all this stuff. But if I had to make a bet, I'd say you're looking at somewhere between a 10 to 20x from today's value. Like 10x would be a bare minimum when it comes to these miners in terms of how undervalued they're, absent of some exogenous event occurring around the world that just makes our stocks crash for whatever reason, whether it be a meltdown or some stock market crash or whatever. So I just kind of want to point that out to you guys. You look at a company like Paladin Energy that's been around for a while. They're 1.5 billion today. At their peak, this is 4.6 billion. Now, this is looking at their market cap, okay? So a 3x from there is what Paladin Energy is telling us. Then you've got, I'm trying to think of what other, I think Boss Energy was another one. Yeah, well, Boss Energy, they're actually at an all-time high in terms of their market cap. They just recently started, but you guys kind of, you can kind of look through this and see what are some of the differences. I think Mega Uranium was another one.
Yeah, Mega, and Bannerman as well, I think wasn't.
Mega Uranium, market cap wise, it was sitting at $1 billion in the last high or the last great bull market. Now it's 67 million. So, you're looking at somewhere between a 15 to 20x. Just to revisit those old market cap highs. But it's a mixed bag. So I think Bannerman doesn't look like they have data on that. But I think like CCJ, if you look at its market cap, it hasn't been really that diluted. It's fairly close to its old all-time high.
Yeah.
Market cap.
And you can see here, Cameco is actually 1/3 of the entire uranium market cap. It's 15 billion.
Yeah, that's a good point.
So that's a major blue chip. And that's also why, the bigger institutions cannot go into like Mega Uranium, which is like a 50 million market cap. They can't do that. They need to go into to Cameco.
That's actually a really good point. You shave off 15 billion off of the total market cap, you're left with $30 billion.
Yeah.
So if you have to revisit the old $150 billion market cap, it's not going to come from Cameco. It's going to come from some of the junior miners instead.
Yeah.
So instead of a 3x, you might be looking at a 5x. That's some important context there because you've got 30 million when you strip out Cameco.
Yeah. I didn't know that actually until I saw it here. So that's quite insane, really.
Now, speaking of institutional buying, glad you mentioned that, Casper. So this is a chart looking at the URNM price versus institutional buying. So you've got the black here, which is the URNM price, and then you've got the green here, which is institutional ownership. This is what the smart money. This is when the smart money is buying. The smart money is buying when the price is all the way down here, and the smart money is in particularly buying URA. URA for the reasons you alluded to before, and so you've got the black line here, which tells us the price. And then you've got these green bars, which tell us the institutional ownership of URA. And as you can tell, can't really see it that well here, but you can kind of make out like as the URA price consolidates, more and more institutional buying occurs.
Exactly.
Yeah. So retail isn't biting, but someone is. And these are all institutional buyers coming into uranium, more so than at any other time in the last 5 years, you can tell here.
Yeah, basically what they're doing is, the retailers is always buying, let's say 20% from the top, FOMOing in, and then the sector, whatever you're looking at, Bitcoin or this one, whatever, goes into a longer consolidation. They get bored, they sell, but that's when the institution starts to pick up all the good stuff from them. So they know what they're doing. They know what they're doing. So
yeah. This is when I don't know if you can see my mouse circling over here, but this is when retail was buying, right?
Yeah.
This is when, I'm sure you get the comments on your YouTube channel as well of like people just who bought in like somewhere in this area, asking when are things gonna get better.
Yeah, exactly.
But this is when retail buys.
Yeah.
institutions buy all the way down here.
Yeah.
Institutions buy when there's angst in the retail space. And one more thing I wanted to show your audience really quick is, so I'm a data scientist by trade, and so I can't help myself when it comes to some of this data. So what you've got here, I applied a machine learning model to predict the uranium price compared to, so it's taking into account oil, it's taking into account the gold price, it's taking into account the DXY, a number of variables like that, and it's producing a predicted price. The predicted price is here in red, and then the actual price is here in blue. And so, like, you can see that when this predicted price is significantly above the blue price, like it was here in 2021 when we had the big run up, that's when the actual price starts to run. And when it's vice versa, when it gets too ahead of itself, that's when it crashes down. So it has to revert to this predicted value. Right now, it looks like we're about at predicted value. So not overpriced, not underpriced. And we've been overpriced the predicted value for quite a bit, since about late 2021, summer of 2021.
Yeah. That's also when we peaked. So
yeah. So the uranium price has been overpriced according to this model, up until today.
Yeah. So basically the past 18 months has been a return to mean kind of move, I guess. So yeah, makes total sense.
We went up so very violently, and we've returned to mean. And then to kind of cap things off as well, this is a fear and greed index of URNM. You've got URNM here in blue, and then you've got your fear and greed index here in red. And anytime you hit, any of these points here, the blue line goes down. So we hit peak greed, I think like a couple of weeks ago or a week ago, and it's been slowly coming down. That's because we moved up too fast, too soon. This is kind of this is using the Bollinger Band.
Okay.
He's using Bollinger Bands as the criteria behind that. So essentially what the model is saying here, we're at fair value when it comes to the physical price. When it comes to the miners, we may have moved up a little too fast. But when you look at some of these prior run-ups, it chilled here for quite a while until it came down. So the gist of it is, if it's going to run, then, it's not, the fear and greed index.
Stay,
it's going to stay up there. So I think,
also,
go ahead.
Also, one note to the Bollinger Band, we have had such a long consolidation. So the Bollinger Bands are very tightly squeezed together. So any move you'll get from that point will show extreme fear if it goes to the downside, or extreme bullishness to the upside, because you're also squeezed. But that's just the start of the move very often. So it depends on how the Bollinger Band, the width of it at that point is. So yeah.
Yep. Well, that's all I got on my end, Casper. I don't know if there's anything else you want to share or leave the audience with.
No, I mean, I think the past 2 weeks especially has been very violent, I guess, but still very constructive on a weekly basis for the miners, especially for the Sprott. I don't think we looked at the Sprott physical uranium chart. Should we do that?
Yeah, let's go ahead.
Yeah. And I just need to very quickly fix something.
And it's still under NAV. It's still like 4%, like 4% under NAV still. So you can still buy it at a discount.
Yeah, 4 or 5% or so. Yeah, that's true. Let me just quickly show it to you. Okay. So this is basically looking back like 15, 20 years more or less.
Mm-hmm.
And we're coming up to the big one, the big red resistance between 18 and 20. You can see here all the interactions coming.
Yeah.
We touched it here, again here, and now we are getting ready, in my view, for the move. The golden trend line that I had is not the peak here actually, but it's this one here, because it has a lot more interactions. If you along the way, fake out here, a revisit to the low one, and now we're getting back above again here with a retest as well today. So if we can get above this 20, $1 level on a weekly closing basis, then that's also where I think that the Sprott Physical Uranium Trust will get positive in NAV, so they can start buying again. I think this is the flip zone. So
do you want to look at URNM or URA versus SPUT? See how that's performing? Because I think we recently broke out.
yeah, it could be actually. Let's see. Just need
We're
to.
close to breaking out.
Oops. Yeah. Yes, we are. Again, this one here is just a clone of that one here. This is the major, and then you can clone it. That's often a good. So when we get here, you often get a pullback. But anyways, as you can see, we're getting there. I mean, this is overall bullish. Again, we need to curl to the upside and take out the highs here at around 2.1. But still, when and if this when URNM and URA starts to go, it will outperform the Sprott Physical Uranium Trust quite heavily, and you will see the breakouts happening. So yeah.
Yeah, we would have to, what is it, like a 50%? Go up 50% just to retrace back up to September 2021 numbers.
Yeah, a bit lower, 40, but still, yes. But you can also clearly see, I don't use the RSI that much. I just use it as an extra filter, I guess. But this was when Sprott took over the U.UN. You can see the run up here in this ratio. So this is just basically a big blow off top at that point. You can also see the RSI heavily oversold here, overbought, excuse me. But this high here compared to RSI over here, there's a huge difference, right? So that was the top back then. And ever since we've just been grinding lower. So
yeah, things look really good. I know we've been saying this for a while now, but it just keeps looking better and better.
Yeah, it really does. It really does. Every week it looks better. And I still get a lot of flag on Twitter actually to say that I'm a perma bull, and I'm not. I try to be as objective as possible, and I also give my levels where I think this case is wrong. I have done that many times, but also on the minors and so on, giving levels where I don't want to see it break down from.
Yeah, but I mean, you look at that institutional ownership chart of URA.
Yeah, exactly.
I mean, they're buying it at like five times more than at any other point in the last 5 years.
Yeah, true.
Like, I mean, these guys aren't in the business of losing money.
Yeah, and it's big money. It's not just you and I. It's big money. So.
And traditionally, they've got to play a little more conservative than the retail does as well. So the fact that they're willing to go off the risk curve and buy URA as opposed to this SPUT or something, kind of it's fairly telling.
Yeah, it is. It is.
Great. All right. Well, I think that's it for today then.
Yeah, I think so.
And yeah, this was a great episode. We looked at technical charts, we looked at institutional ownership, we looked at some machine learning models, we've looked at
some ratios.
So I think we've looked at this thing from a lot of different angles. So things are looking good, guys. I know, it seems like
broken bracket. Yeah.
We're perma bulls, but I mean, I don't know what else to tell you. Like, I can't seem to find anything negative, I mean, to a substantial degree to say. So who am I going to believe? My lying eyes or my Twitter feed?
Yeah. So I mean, I have two, we can have a nuclear power plant incident, or we can have a major overall stock market, just crash, like a what's it called, a credit event, just everything gets sold off.
Yeah.
I mean, it doesn't matter what you have at that point in time. Everything will get sold off. So
yeah.
So
yeah. The important thing is don't go all in on one thing.
Exactly.
Yeah.
I like to say that the uranium trade is like having pocket aces pre-flop. You have an 80% chance to win. So you want to push as much into the middle as possible that you can afford to lose, and still expect to lose 20% of the time. So that's how I see it.
Yeah. Yeah. I mean, and the uranium trade is on the far end of the risk curve to begin with. So, I mean, you don't have to take additional risk, in uranium. You don't have to like buy a bunch of these penny stock uranium companies. You could just play it safe by buying URNM.
Yeah.
Or, if you do your due diligence, you can try to outperform URNM, get a little alpha there, but you don't really need to go off too far off the end of the risk curve, because you're already on the far end of the risk curve
Yeah,
by
true.
investing in uranium to begin with.
Yeah. So at least I think at least 50% URNM is a perfect way to do it, and then you can add in.
Or URNJ.
Yeah, for sure, for sure. Yeah.
Great. Well, if you guys enjoyed this video, be sure to give it a like and subscribe. Comment down below. Let us know what you think. Share. Do all the YouTube stuff we're supposed to tell you to do.
Exactly.
And Uselink, Casper, do you have anything else you want to tell the audience before we sign off?
No, I mean, we just, before we went online or started recording, we talked about doing more of these. So if we get I think some good feedback, I guess we can start to see if we can do this on a regular basis, on a weekly basis, maybe. Going only uranium. I think that's
yeah, and this is being dual recorded, so we'll post it
yeah.
on both of our channels. I'm going to link to your channel, Uselink.
I'll do the same.
It'll
So
be in my description box below. So check out Uselink's YouTube channel. And I'm at Capital Cosm as well. If you're watching, if you're watching from Uselink's channel, so
yeah, and same here. I'm from at Uselink INV. So
cool. All right. Well, I think that's it then.
that's it.
Thanks for watching, guys.
Yeah.
See you in the next episode.
Bye, guys.
Bye. Oh, I don't think